Hello again, everyone. This is Joe Henches with Beyond the Chart. In this stock analysis video, we're going to take a look at the 5 best performing stocks in the S&P 500 so far this year. So stay tuned. Okay, we're going to start off with number 1, Vertex Pharmaceuticals. And you can see the trend that it's been in since December. So pretty nice move, a huge gap up that occurred in March, and got this trend line drawn here. Let me get rid of the crosshairs for the moment. And right now, this continues to just trend to the upside. It looked like it started to break down in early May, but then got its legs underneath it again. And now we're getting a couple closes. I don't believe this closed below. No, it did not close below that 10-day moving average. The blue line's the 10-day exponential. The blue-gray is my 21 simple. The red is the 55 simple. So, possibly starting to break down again. We'll have to watch this very closely. We got a couple closes in here below that 10-day moving average. No follow-through. And so watching to see whether that occurs in here or not. If this starts to break down, I would expect there's going to be some near-term support here in 114 to 115, where it got support here, about a month ago. And then if that doesn't hold, then I would expect as it comes on down, this trend line should be fairly strong. And it all depends on how long it takes for this thing to move on down there. But right now it's still trending, trending fairly solidly, but I would be on the alert for a possible breakdown. Now, Activision Blizzard, this looks like it broke this trend line. This is the number 2 stock. This trend line from early February, actually you'd have to say from the first of the year in here, December or the first of the year. This low point here is December. And, it's been trending up, fairly sharp trend line here, about a 45-degree angle. Big gap occurred again in February. But we got this break after this Friday, big reversal Friday action when the NASDAQ went down. And we got follow through on Monday. So here's a little short-term trend line that I would definitely keep my eye on. But the fact that we broke this longer-term, 5 to 6 month trend line in here, all we've done this last week is pull back up to it. So I'd be watching very closely in here for this to be rolling back over and closing below that 10-day moving average. Trying to see if there's anything else. No, those are the main things I'm looking for here on Activision Blizzard. The next one we'll take a look at is Wynn Resorts. And wow, this thing, we were getting bearish divergence in here between this April action and this May action. But it just continues to try to trend to the upside. Now we've got this short-term trend line and we've got a longer term. Let me zoom back out of this. Longer term, of course, this is back to the January 2016 low. And really only one major play. It was kind of a sideways, just a sideways trending type action that gives us a pivot point to bounce off of for the trend line in here. Here's the shorter term trend line that we need to watch. Friday, it looked like we're getting the breakout, but it may have been a fake out breakout. So we'll have to watch that because it just didn't hold. It came back down and closed just like a little doji candle. Basically right about where it opened. Now it's up 42 cents for the day, but kind of disappointing that it didn't hold above these highs in here. So we'll have to keep an eye on that. Now, Wynn is bearish on 2 out of my 3 indicators. The relative strength RSI is bearish. The DI plus is bearish. It's not quite giving the same signal on the demand index. So 2 out of the 3 are showing that. So again, what we're going to watch for is this starting to break down and roll over and getting a couple closes below that 10-day moving average. Now, it tried it once, twice, 3 times, actually back in here 4 times. Never got follow through on any of these. So if it starts to do it again, that's what you need to be on the alert for. All right, so that's Wynn Resorts right now tracking to the upside. Also, CSX Corporation. Another really strong mover. This is the fourth biggest mover in the S&P 500. And here's the 12-month rally. This is showing from, is that the bottom? No, it's not the bottom. The bottom's back here in the January 2016. But still, this trend line is the clearest trend line that catches several of these pivot points. And that's exactly where we came to on Friday. Friday's low is right at that trend line. So I think that that is extremely key right here. We are possibly breaking down. We've now had 3 days below that in a row, below that 10-day moving average. And I don't think it's really broken down yet, but it's getting very, very close. And the other thing, when we look at this, let me look at the divergence. We are getting bearish divergence on all 3 of the indicators, you know, between these 2 pivot highs. Okay, so this move to this move, all 3 of my indicators are showing up as bearish divergence in here, which could be, you know, signaling. A lot of times when I like to see that, and then you start to see the rollover, the breakdown, that kind of confirms that that's what's happening. So we get this trend line break. We're probably going to get some support at 49. Of course, we got a little gap in here that did not close yet. And then you're going to get more support in the 48 to 47 range, and that's going to come in here. This is the 144-day moving average that I put on the charts. Also, a little longer term, not quite the 200-day moving average, but I like to use the Fibonacci numbers. Now, you got this big gap to keep an eye on too, but right now you get, you know, a lot of potential support in this 46 to 48 area should it continue to sell off and break down here, break this trend line. All right, that's CSX. The last one we'll take a look at today is Nvidia. And of course, this is, you know, highly followed and very, very well known in terms of what it's been doing, the price action. Huge, just amazing trend line, amazing momentum to the upside here. Several big gaps that we had in November and in early May. Now, this is that NASDAQ big reversal candle, very bearish. But notice how we haven't really gotten any follow through yet. You know, not getting any closes below that 10-day moving average yet. But that's what I'm on the alert for. This too has bearish divergence on all 3 of the indicators. Okay, so there's the demand index. There's DI plus. Okay, that's the buying side. This is the RSI. So we're showing, you know, bearish divergence on all 3 of the indicators in here. But we don't have the price breaking down yet other than this big reversal candle, but we haven't gotten the follow through. So that's what you need to be on the alert for. And of course, you know, major support, we might get some minor support in here, but major support's going to be down here around 120. And of course, depending on how fast that pulls back, here's where this trend line is coming in, which is this longer term trend line from the January 2016 low. All right, that's the picture on the 5 best performing stocks in the S&P 500. We'll see how they do in the second half of the year. They could be running into a little turbulence here over the next weeks and months. All right, if you felt the video was helpful, please hit the like button. And if you're not watching this on my website, head on over to joehenches.net. I got a really good post out there today about golf and trading and how trading the stock market in golf has some interesting similarities that I think you'll find interesting reading. All right, everyone, have a great weekend. And to all the fathers out there, have a wonderful Father's Day.